Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, January 13th, and this is your end of day market recaps. Theme of the day. I actually have these up from earlier when I did a member midday video, and this video is going on a little bit later because I just sent out or just put together another video on our TTG trend portfolio. We've been making some changes and trying to adapt to what this market is giving us, which is which is some trouble so far this year, right? You could see kind of interesting the performance. Well, it's definitely interesting, but for today, what the Qs were down 2.5%. SPY was down 1.3% for the day. The small caps actually outperformed a little bit, and bonds were rallying pretty hard today. I want to talk about that a minute. I got a lot of questions about that, so I will go over that. VIX big jump, right? So up 15%, right? So that should tell you a little bit of a hint about why the bonds were up today. But let's just talk about year-to-date performance for a second in the overall market. This is pretty nasty, right? So over here in my spreadsheet, you could see year-to-dates, and I've got things in here like the S&P. I've got a couple of the growth ETFs that everybody watches, the ARK and the IBD 50, right? Those things are suffering right now. SPY down 2.1% now for the year. Qs are down 5% for the year. IWM kind of in the middle of that, down 3.7%. Mid caps are actually doing a little bit better. Growth is down this is mainly large cap growth, by the way, down 6.4%, and values up 2% for the year. So bravo, value and value traders so far for this year. ARK and the IBD, down 15%. I'm not going to spend too much time here because I know that this ARK ETF gets a lot of attention, but that should tell you something, right, about stock selection right now and growth at any cost. When the market changes, these things can really unravel pretty quickly, right, if you're not paying attention to what you're doing. Also, one other point, and then I'll move on. I don't want to bash anybody or anything like that, but the way, if you notice how they're trading, continuously adding to losers. Now I understand that they say that they have a long time frame, 5-year time frame, but adding to losers and selling your winners, typically is not a great trading principle. And you could see the results of that so far this year, right? And what transpired last year by doing that type of strategy, in my opinion. All right, so let me move on. Sorry, I don't want to spend too much time there, but it's interesting to kind of to note what is happening, inside of that. So let's talk about. So I mentioned bonds. They were up decently, and I got the question, which I know I was going to get the question because we've been talking about this a lot, is typically, right, it's been a major headwind for when these bond yields are going higher, right? And growth stocks have certainly, there's been funds that have been getting out of growth stocks because of the interest rates going up, right? What we're looking at here in TLT again is the long end of the curve, right? But when there was a ton of Fed speakers today, different Fed governors. I don't know, it was like 4 of them. Each one are talking about raising interest rates. Keep in mind that is on the short end of the curve. Both of those, the long rate and the short rate, right? They're, as interest rates overall, depending, it doesn't, in this sense, I don't think it matters too much what portion of the curve, of the treasury curve, right? So if we put the treasury, let's see if I can get this to come up here. I may not, but that's okay. This might do it. Let's see. But if they're talking about raising interest rates on the short end, which are currently pegged to 0, right? That's and moving them up here, right? It is adjustment. It makes everything more expensive. So also the other thing is, even like I view this today, bonds going up is kind of a flight to safety. So the relationship of that, and I've mentioned this before, just because you see bonds doing one thing, it doesn't mean that stocks are going to have, you know, a certain reaction to them. There's so many other factors out there at play. Remember too, that the institutions control the market, right? Whether they're buying or selling, right? They're much bigger than retail investor. So if they're pulling money out of this market, it doesn't matter what bonds are doing that day, right? So, you know, sometimes, you know, we like to look at these relationships and make conclusions based on them. But at the end of the day, the institutions don't have to act rationally. The institutions don't have to say, oh, geez, you know, bond yields are down today. That means I have to add to my stock positions. They do whatever they want to do. And if they're spooked out, you know, they're going to start really reducing risk. So let's talk about the indices for a minute, but that's my quick market ramble. This is another break of the 50-day moving average in the S&P. This is a little bit more, I don't want to say troublesome, but the more times that you kind of break this 50-day moving average, I think that this is kind of leading to some trouble for the for the overall market for now. We can break it and kind of come down here, right? This was a beautiful kick save the other day. I think this kind of stemmed again from the growth names again. The issue with going back to this, right? When you look at growth down 6.4% and value up 2%, the issue is they're not one for one in the indices. So the more money that's being sold out of this area, right? We can look at just what the major what the sector distribution is. Let's try this again. All right, so when you look at the sector distribution here, you've got 28% is tech, 12% is consumer discretionary. So, you know, you're looking at most of consumer discretionary is growth. So you're looking at 40% just right in these two sectors, right? That is growth. So as they unwind some of those areas, it's going to bring down the overall index quite a bit, because while industrials had a nice day today and we're looking pretty good, they're only 8% of the S&P. So they're just not going to move it that much. Okay. So that's kind of what is going on under the hood. And weakness sometimes in the overall indices means that for those people that are just holding the index rather than individual sectors, once they see weakness in the overall market, they begin to kind of make some adjustments. And if they're technically based, right, they might be selling at that 50-day moving average. All right, so the VIX was up 15% today. Let's take a quick look at that. All right, you got to move up here. So interesting, kind of made a little, I don't want to really chart this too much, right? The technicals, because again, the VIX is just what the implied volatility is in the S&P. But, you know, this definitely crept back up here. It did not take out the high here, which is somewhat of a good thing. But, you know, I think also when you look at we have a 3-day holiday coming up too. So by chance, that could also be a little bit at play. Let's look at the NASDAQ, because that's really where the storm has been kind of brewing. This has looked weaker, right? This is deeper under the 50-day moving average. One of the things that we talked about a couple times this week is that all of the growth names, high growth, were oversold, you know, when we got into this week. So we saw basically what I think is an oversold bounce in many names. And once that bounce is done, you know, we're starting to see sellers kind of come back into the market. And that's a break of the value area. Notice, you know, we climbed back in, started the day inside value, and we're coming back down. So this is going to be another area to kind of keep in mind, but, you know, zoom out a little bit, right? This does not look constructive right now, right? Lower high here. So I'm just seeing this in too many charts. I'm sorry to be negative on a day where the market is down. There's too many things like this that are kind of warning type signals where you've got a lower high in here. All right, so that's the indices. IWM, do I need to talk about IWM? I still think that this may be setting up for a short. right? Here's the bottom of value for the week, right? And I think if this starts to break this range, I think it could really be setting up for an interesting short. So what I normally trade things from the long side, but I will tell you this, there's a lot of really good short setups right now. So if you could do yourself a favor, I've been getting acquainted with shorting again, because I really haven't taken that side of the market too much. I go with the trend, right? But if the trends start to break, like this IWM here on the weekly chart, you better believe I'll be picking up the shorting while this market is under distribution, right? So I think it's one of those things. If you're really not big on shorting, then it's sitting on the hands while some of these things kind of go this way. So one day is not a trend, right? But we're starting to see a pattern of this. And the more that we kind of push our way, the more that we're going to be breaking support. SMH, I wanted to talk about the semis for a minute. Taiwan Semi had great results. Look at what I think, we were talking about the possibility of pin action in some names today, but a lot of the names that were up pre-market, that was the high of the day as they went. So here's where Taiwan Semi, got all the way up to 145. Closed at 139. It's a tough looking candle. Applied Materials, still holding above the breakout, but that's a tough candle, right? And these semis have been tricky. Taiwan Semiconductor was very tricky last week, right? For example. All right, so I wanted to cover that group just a little bit. I'll tell you, until this, by the way, and here's the S&P for the day. Anything like this, again, I'm trying not to be negative, but when you have candles like this, right, here's a break of value for the day. And we took out this VPOC and we started to kind of gravitate back up and then just continue to go down. Look at how similar this was, right? Going down, consolidation, try to kind of get back up here. And then sideways, try to reclaim, kind of bounce, and same exact pattern that happened like within an hour. So again, what is this price action? What is it telling you? It's telling you that there's a lot of sellers in this market right now. So patience is key. I know you're going to hear that all the time. Let me talk about a couple of things that I thought were acting pretty decent. Right, mainly the industrials, right? Caterpillar had a nice day today, still up 2%, right? It got to the top of value for the week, right? And I still think that this goes up to 237. I think we covered this in yesterday's video. So I mean, look at this. This looks completely different, right? Somebody actually sent me this name, which I thought was a really good looking chart, Oshkosh, up 3.3% today. Right, and you got a VPOC up there at 125. If you go through some of these other charts, and Eaton is very close to breaking out. This name was not up on the day, but it's so close. I think it's definitely one to keep an eye on. Deere, I actually took a position in this. I thought that this is just, very similar to Caterpillar, and we talked about Caterpillar and Deere a lot in last week's videos. But it's digesting in here, right? Let's go to the 1 hour chart. Now, again, it did not do what I was looking for it to do, which was to get outside of value and start to trend. But notice where it went to, right? And I think we talked about that in the trading room when it happened, that this 380 was a great place to target. That's as far as it went. But notice how the price is hanging around here. So we'll keep an eye on Deere for tomorrow, but I think that's a really good one to watch. Another one is Emerson, right? Was just trying, didn't get it, but if it can kind of hang in here, maybe this can kind of push to 101. All right, so that's where I'm seeing the strength. A couple other names too. Goodyear Tire, which is a name I got long. I managed to hit one target. I just missed the second target in this one. But so there until we had that volatility, there was a lot of actually good looking things going on in the market. You just kind of have to be open to looking at some of these things that you may not have looked at previously. Here's my trade blotter, as I like to share this just about every day, almost every day. Sometimes I forget to be honest, but here's how I traded to today. I was looking at Qualcomm. I actually put I actually put in the room where I was thinking that it would not work. And for some reason, I must have got up out of from my chair and I came back and I missed the alert going off. So I had to cover this one. But here's what the Qualcomm chart looked like today. So I tried this. I've been watching Qualcomm. Right? There's been some call buying in this name. Right. So here was the move. And then 188, which is what I mentioned. I put a chart of this one. And by the time I caught it, it was already at 186. And not good management there by me. Here's the GT target. Ford. This was something that I was long a residual position. I've done pretty well in Ford this year. It actually held in here. So might be something to kind of watch tomorrow. Also, another name that I talked about yesterday, STLA was up 2%. Again, kind of susceptible to everything else. But again, you kind of have to look at the weekly chart. It's very gappy because it's an ADR, right? And the majority of the action happens in the overnight markets, right? While the US market is closed, right? But look at this thing. It looks great, I think, on the weekly chart. So there are definitely some bright spots in this market. I didn't mention this in yesterday's video, but we did pretty well on shorting this vaccine group. Novavax was down 13% today. It just looked like another name that had a weak bounce and looked like it might go lower, right? It's on the bottom of the range. Moderna too. Again, I'm not saying anything negative about these companies, just that the charts look like they're headed for, more downside. So I would watch Moderna too. I think this could possibly come in here and take out, get down to maybe even 162. Watch that value area for the week. Maybe, it's got a bunch of these things that virgin point of controls that could be taken out. So again, that could kind of help in this market to have a couple things that you might be looking to short. Expedia, I tried that name, big call buying in this one. I was looking for more reopening type plays, right? Travel company. I decided to take this one off. You just kind of have to be careful with how many, in my opinion, right? This video is for information purposes only, not giving out any advice or recommendations. But in my opinion, even if I like a setup or a trade, you just have to realize that how volatile this market is right now and how many positions that you want to have on. So I always tend to kind of take off the positions that I like the least. Coin made some coin on some puts in Coinbase. Another one that I think goes lower. This is now broken the trend line. All right. So again, do I, look to kind of make all my money in shorting stocks? No, that's not my bread and butter. But if that's how the market is going to be right now, then, kind of look to kind of scalp some of these trades. But that was a nice trade. I kept the last piece on for now. In the afternoon. Even this one, like I normally would leave the last portion of a trade on. Right. But hey, you got to break out in this thing at this point. I'm putting in some money in my pocket and moving on, but real nice breakout in this one. All right, guys. So hang in there. If you're having a tough time in this market, the more that you can kind of not get whipped around and not lose too much money. If you're playing most things on the long side, when the market does this, you'll be in good shape for when this market turns around and acts better. But we don't have a crystal ball, and I'm not going to make a prediction, but a lot of things that rallied the last couple of days just look like an oversold bounce to me, especially in growth. All right, guys, have a great night, and I'll see you tomorrow.